Good morning again, everybody. Hopefully, you're all back in and can hear me. Thank you, Perry. Appreciate that. Hello, Armando, again. So, 3 minutes in front of the crude oil report, and it'll come out. We'll wait 2 minutes. We'll start looking for trades. In case you're new to this is the 377 tick chart with counterpunch on the right. Got a couple spotlight charts on the left. The upper one is a faster 5-tick momentum bar. The lower one is our 8-tick momentum bar, which we do our mini sessions on. So that's something you guys like to use, some of you, for the crude oil report. All three, same rules. Wait 2 minutes. You can get in sync with an earlier setup if it hasn't hit a money management level. The first trade as a result of the report is one I typically like to avoid because it's a little bit warped because of the reaction that could happen, oftentimes extreme. So I want to let that kind of play out and look for the setup that happens after that first reaction the first setup due to the reaction. So it's been a kind of crappy market today on crude so far, real balance between buyers and sellers, lots of whipsaw up and down, very choppy. We'll see if things change. And as I was saying earlier, we're up in the $70 nosebleed level we haven't seen in a very long time for crude oil, and the market could be getting a bit toppy here. And a heads up also is that we're getting closer to moving over to the August contract. And I'm thinking that's going to happen probably by next Thursday or Friday. So next week on the 16th, we'll most likely still be in the July contract. But then after that, just be ready for the August contract. All right, so we've got another 15 seconds to go. I'm JP. I'm talking about the first trade that is a reaction to the setup, to the report. Nothing that I haven't done anything the same. All right, so there's a reaction. We're going to definitely mark. See, that was a trade that's a reaction, the first setup, just printed. So we'll wait for one. Even though that's not a very big trade, it's a small trade, so maybe it's a crappy example. But it doesn't surprise me because today's been really lousy price action in crude oil. So this is the initial reaction. We're trading in the middle of it. It may break lower here. It's trying to. There it goes. Yeah, and I'd almost consider this actually the first trade of the reaction. That's the one that worries me, is that big, it's much larger than usual type of thing. But no guts, no glory, right? Let's see what happens in the next 50 seconds or so. So if the market starts selling off from these nosebleed levels, it could come down and test that 70 level and drop back into the 60s here. But the short's at 70.09, and we probably want to push that down to 06 to make sure it can get below that swing level. And could come right back up into the middle and test these levels here too. So we got to be careful. And now we do have a setup, and the short is at 69. I mean, adjusting it down to 60. What'd I say? 70.09. 70.06 would be the adjusted short, and maybe there's a long setup. This is not an easy trade to take. There's a long trade now at 26, also valid. And if that triggers in, the short will be canceled. That short trade's risky. That might be like the kind of trade I want to avoid, but it was the second one after the news coming out, so it's just really hard. That's a tough one, but it could lead to a really nice winner if it pushes lower. This could be a bearish consolidation happening here. So if you get into that short trade, it's targeting 66. It's quite a ways down, and the stop is at 43. And there's also the risk of stop and reverse. So that short trade may end up canceling here. And long at 26, if you get long, that one's targeting 66. Long at 26, targeting 41. I was still looking at the short trade. That would be targeting 41, and the stop would be at 07. Kind of tricky. And yeah, it's a lousy little trade too. Yeah, so far we're flat. And a new short, and that new short is the one we would want to take, and that one's smaller. It's still going to get in at, well, gosh, that's really small. But yeah, we want to definitely get below that level there. So that messes up the setup. But I still think we don't want to get short above this near-term support. So could go with the larger target still if you want, but the smaller trade is targeting 94. That's the most current trade. It's usually what we do. By the way, the long trade is canceled. Cancel the long setup. So short at 06, that's the new setup. And really the newer trade is really small, and it's a crappy risk-reward ratio because of the adjustments. I guess you could go to target 3, or you could stick with that earlier big trade and hope for the best on that. Yeah, this is, the market's super choppy, just like we saw earlier today, but you never know. 26 is the stop, and your target would either be 94 or 88 if you want to try to squeeze a little more out. It's going to have to get through new lows of the day to get there regardless. But because of your adjustments, the risk-reward ratio is kind of crappy, and it may cancel. So 2 closes above this signal line, which is going straight across, indicating all this balance. Could be a bearish consolidation still, though, here. It's been unable to get higher. It is not traded back into the initial reactive range. the reaction range that occurred. It's still trading below it. So 06, the adjusted entry. Again, the stop would be at 26, and 94 just becomes a lousy target now after the adjustment. So I'd be inclined to go for 88, and it may not be able to get there. This is not the most ideal situation here, and we want to not get short on top of. Here's a new setup. This new setup's pretty crappy too. It's really small, and the entry now is still at 06. It's just that the targets are even smaller. So this is crap so far. Lots of short setups in here and difficult getting lower, which is why we did our adjustment the way we did. Looks like it's going to try to get through it. I'm staying with this middle trade going to target 3 personally. It's just a guess. I mean, at this point, we're kind of in no man's land. This is just real crappy. But if it breaks lower, there could be an opportunity to make some money here. You could look for a bounce off of 70. That's the thing. I mean, it maybe just stops in its tracks and heads up. We saw that happen from the downside when it hit 70 and stopped and went straight down again. That now we could get the reverse of that. Hard to say. Can't really move our stops until we get as low as 96 with that adjustment to 06. You want to at least get 10 ticks before you move your stop to break even. Otherwise, why take the trade in the first place? You just get stopped out anyway. The 5-tick momentum bar got short on top of support. You'd want to make those adjustments on that. The 8-tick has been short on the left. That one's been short since before the report came out. Yeah, this is just more of what we saw earlier today through this morning's session, and just not very attractive. And I'm even skeptical. I'm skeptical that it'll break through with follow through. I think it'll break through and potentially we'll just move back up into the garbage. But you never know. Markets could come out of this sort of compression, price compression with energy. I'm just having a hard time believing. It's definitely looking like it's finding support right down in here. Looking like we're going to get a possible long setup. Could be at 22. Oh, there it is. Wow, big adjustment. 26. So there's a long at 26. Terrible because of the key level adjustments, which is really helping us stay flat, but it messes with the risk reward ratios and you end up risking more than you could even make to target 3. And it's just a function of the lousy price action and the lack of range. So, I mean, I'm not crazy about this setup either, but it could win. I mean, it didn't go lower. 26, targeting 37, and you got to risk 19 to make 11. Not my favorite. You could try to get to target 3 as well, which still doesn't make you as much as you're risking. I hate this setup. It is what it is. I'm going to pass. I don't like these trades, personally. No, you can't outthink the market. And what the setups are telling you is that, if you're going to trade in this market, you're giving up some odds. Like the odds aren't really as much in our favor. And the information is there. It's right in front of us. You want to at least get close to a risk reward ratio that makes sense. It doesn't have to be exactly 1-to-1 if you win a lot, and this wins a lot. But when you're like 0.58 to 1 to target 2, you have to risk $1 to make 58 cents. No thanks. That's just garbage. And it's a function of what we're seeing here. Anyway, this trade may cancel. The session has been like this from the start. Yeah, so now you have a new short trade. Still, you kind of have to make that adjustment down to 06. It's another 3-tick adjustment, which messes with your numbers again, because there's already key level adjustments at work, which are, the strategy is doing a really good job of keeping us flat, and it's also showing us setups that are just not that attractive. And maybe that's the sign to, stay flat. I'm sure there's action on the pound Aussie. Yeah, the pound Aussie's got stops moving. It's hit 1 and 2, targets 1 and 2. This is what it is, guys. I'm kind of interpreting this as a somewhat toppy market. Oh, the purple trade triggered in. All right, that's the first trade. And just like I said, I'm not interested. I stayed flat. I don't like to take trades like this. These small little trades, but that doesn't mean it won't win. It could win. So if you guys are in it, there it is. There's another setup there, much larger. So one technique is to just segue over to larger targets. So remember, the primary objective is target 2. It's going to be 11 ticks. Money management is right here at 36. So we're targeting 37. Maybe it'll win. Maybe it'll be one and done. And there it is. So it hit money management. Move your stop to break even. If you're in this trade, maybe you'll survive. Stops need to go to 27. If it goes 1 tick higher, mission accomplished. I'm just not going to risk 19 ticks to make 11. Something I feel uncomfortable with. I would have went to target 3, but that also is usually we're getting in 2 ticks above the setup bar. This one got in 6 ticks above the setup bar. Which messes with the risk rewards. And it still hasn't even gotten to target 2. Also, let's just look at this for a second. We are now trading up into the right dead center of the initial reaction. Which I outlined with this yellow line here and this yellow line. So we're right in the middle of the reaction. That doesn't mean it's not necessarily bad, especially when we're trading up into it also. Or if you guys are having a hard time getting any higher here, but it's holding so far. Did you guys lose the video? Jeez. Let's see if I can fix that. Well, we just hit target 2, so this did end up getting the job done. Let me see if I can bring it back for you. All right, so it looks like you're back. It hit the target perfectly. It only got 1 tick higher so far. And this trade plan is going to be one and done. I mean, it hit its goals, even though it was a crappy trade. It was the trade that won. And, you know, you guys made a grilled cheese sandwich if you traded this, which is something. You guys can see now, hopefully. Yeah. So I tried to talk you through my thoughts on it. The strategy worked. You got all this key level adjustment stuff that really was important at the time, and then clearly you're getting something out of the cost of insurance. It did put you in the trade, which was a winning trade if you took it. But just to reiterate, I'm looking at these numbers down in here, and to risk 19 to make 11 is just not, I mean, you could see the R to R ratio. I want to at least be able to make 2/3 to 3/4 of my risk at least, and even that's crappy. So target 3 does that, but I want target 3 to be more than 1-to-1. So when target 3 is less than 1-to-1, you've just got a setup that's been a little bit warped out of shape, and that's usually because of the cost of insurance, which is the key level adjustments that take place. And it wasn't just the entry. There were key level adjustments on the stop as well. It's pushed way down here. And that all that extra space above and below the setup bar is what skewed the risk reward ratios a little bit out of whack. And it ended up being a perfect target, didn't it? My thoughts were pretty much the same as yours. Yeah, so, but clearly the strategy worked. But, I mean, whatever. It's just another trade. It's nice to see the strategy working. As messy as this looks, it's kind of hard to decipher, too, if you don't know what to follow and how to keep your eye on the proper sequence. But today's just been a bad day in crude oil. The price action's been terrible. And I do believe it's because it's really toppy up here in the $70 a barrel range. Crude's trying to move higher. Remember, the range of the reaction, we're right in the middle of it. I mean, you can't see it on this chart anymore, but this yellow line marks that initial reaction of the crude oil report coming out, and we're still below the upper end. We're right in the middle. I don't need this line anymore. If you're in crude, if you're in this trade, the stop just moved up to 70.29. So you may want to keep it below the 200 moving average and try to stay in the trade. Maybe put it at 28. Let me compress this a little bit so you can kind of see. Here's the reaction, all the resistance up here. We're right in the middle of that range. It's kind of predictable, actually. I'm going to look at something for a second. All right, just stopped out. So the trade's over. Strategy is one and done. I'm looking here at a daily chart. Just wanted to pull it up and show you what we're looking at here. Crude oil has been going up, 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 up. This last leg up back on May 20th was as low as 61, 67. And it's gone up, $8.50, pushing on $9 straight up. And so you could see the range in today is very low. This is the range today so far. It's a small little bar pushing up to new highs and having a hard time finding more buyers. That doesn't mean it won't find them, but you're getting a lot of resistance. You're getting a lot of people pushing back right here so far. A lot of selling going on that's making it hard for to find more buyers. And this little bar here is representative of the crappy range we're seeing so far today in our day trading. On a swing trade side, and remember this is just a rollover chart, so you have to kind of take it with a grain of salt, but it does give you the big picture. And you could see that it presented a long setup at 66.56 on the daily chart, and it's getting pretty close to that first target. So 71.50 is very possible. That target is 71.48. But we're still, that's a $1,000 move or more. It's another dollar higher. But you could see the high trend chop indicator here had a hard time getting below zero. And it's reflective of the choppiness that occurred. This was pretty toppy right in here, right? So this is all kind of toppy. But look at how it got choppy on the daily chart, finding with big, long, extended day. These are probably good trading days, but all on that 50 moving average. Look at the gravity that gave and the support. So it's finding support at the 50 moving average as it keeps moving higher, but it's pretty extended off of it. So you got to expect it's going to come back down to that 50 moving average. The question is how much further up? Because the spread between the two, the 200 and the 50, and then the 50 and the price action, there used to be a trade set up, I think it was part of Trend Jumper, where we had the measuring stick type of trade. And this gives you a pretty interesting look at, if you measure the distance between the 200 and the 50 and then push that up above the 50, you could see that it's a little bit above that target one there. But when it starts getting up to this zone, you almost expect a reversion to the mean of some sort at some point, right? Anyway, just different ways to look at it. If we then now look at a weekly chart, just to really get the big bird's eye view. The range on the week is very low too. This week, I mean, we're only 3 days in, but still. But it did poke up to new near-term highs. The last time it was up in the 70s was back on January 2020. And notice that it found resistance at the 200 moving average on the weekly chart. And then you had the setup to go short here on January 24th, which was kind of a premonition, because remember what happened right here around the end of February or March area, I think, is, COVID. The disaster of COVID came into our lives and this happened. And Counterpunch probably wasn't thinking about COVID, but the price action was indicating the market was done going up. Kind of predicted the sell-off quite a bit in advance. So the big weekly and daily charts can definitely give you insight. And we're definitely long on the weekly chart. You got the 50 coming from below the 200 pushing up. This is a testing area when the 50 comes up to meet that 200. But so far, we're seeing it trying to get higher. And the 200 has a little bit of a curl, like it's trying to get up, but it's, I mean, it can go up or down because you could see on the high trend indicator that's a bit overextended, but it's also finding support in here on that 200 moving average on the weekly chart. So we saw it finding support on the 50 moving average on the daily chart, which was already above the 200. Well, here on the weekly chart, the 50 is moving up to meet the 200. That's all a reaction from dating back over a year ago. But remember, it was already below the 200. The 50's been below the 200. I mean, when was it above it? Look how long it's been below the 200. You have to go way back to where it was barely above the 200. You're talking 2014. It's been 7 years since the 50 has been above the 200 on the weekly chart, because crude's been going down, 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 down. And if you learn a lot by looking at these big cycles. So look at it coming up now, trying to get to the 200. I mean, this hasn't happened in a very long time. And even when it did happen before, it didn't stay up there, right? It had a hard time staying up there. Like, it wasn't ever really significantly above the 200. This is going back 10 years. It's never really lived above the 200 for very long. So what does that say about what we're witnessing here? It's coming up to maybe meet that 200. I mean, are we finally going to see some sort of stratospheric rise in crude oil? Or are the odds telling us that we're kind of maybe reaching a toppy area in here with crude? And the odds are that it'll start to come back down again. No one really knows for sure, but we can certainly learn a lot from what's happened over the last 10 years just by looking at the relationship of the price action and the 50 and the 200 moving average and how they all kind of interacted together over the last 10 years or so. So interesting information. How that affects your day trading, I don't know. I mean, clearly you can see that the low range on the weekly chart and the low range we saw on the daily chart has resulted in, the type of price action we've seen today. Second trade wins on crude. So after some crappy price action here, the first trade got to the target perfectly, and the second trade got to its targets. So, and a short trade at that, it was unable to get any higher. So trying to get to a target 3 to squeeze that risk reward in your favor would not have even helped at all. You can see the risk reward on this trade here quite a bit better. This is the kind of trade you want to take. We weren't looking. The trade plan doesn't have you taking more trades after that winner, but it certainly was a good trade. You could see the 21 cent target 2 better than a 1-to-1 risk reward ratio. You see, that's what I would be hoping for. There's no key level adjustments. That's why. Anyway, guys, that's a session. It is what it is. We've done so many of these. We'll be back again for the next one. And the one after that, the one after that. This is just another session. For me, it was just a flat no trade session, but you could see the strategy worked. And that's it. If anyone has any questions, please let me know. Otherwise, I'm going to call this over. You're welcome, Judith. Just a quick announcement. You guys might start receiving stuff about the Catapult Energy Futures boot camp that I'm planning. Haven't spent too much time with it. Start showing more and more of it. It's pretty exciting. I did put a nice video on the Trade Hacking Club regarding this interesting trade plan with unleaded gas. If you haven't seen it, you might want to watch it. I think it's pretty interesting. And yeah, so Roger talking about the talking heads talking about a $75 crude. I mean, that's a pretty big number. I mean that would be the obvious next price, but it still has to kind of get through and hold the 70 level, which so far it has been. But you could see, look how it came back down and cracked below 70 even just a little while ago to 69.90. So let's see if it can hold above 70 and keep going higher. I don't know about you. I'm hoping it doesn't. I hate paying $4 a barrel, $4 a gallon at the gas pump. I hate it, but that's just me. Especially when I got multiple cars to deal with my wife and my daughter and my son and me. Oh my God. We're all working just to keep the oil companies rich and fat. Anyway, guys, again, hope you enjoyed the session. Oh yeah, I was just saying before I let you go, I was just mentioning, if you get on the Discord channel on the Trade Hacking Club, you will see a video that I just put a link to. Maybe I'll just give you the link here just in case, if you want to just click on it. I think you'll enjoy the video. It definitely talks of the power of the trade plan, which is really what this is all about, right? I mean, if you don't have one of those, you're in trouble. I know, John, I know. Is that helping you? Is the $70 a barrel price helping you? So anyway, there's a link to the video in case you're interested in seeing it. And I noticed you put worked as in past tense. In a way, we're working in the industry too, aren't we? Providing liquidity. Actually, hopefully taking liquidity out because we want to put that profit in our pockets as traders. All right, I'm definitely getting distracted, sidetracked here down the rabbit hole. Okay, well, good luck with that. All right, everybody, have a wonderful day. I will talk to you all later. Don't forget, John will be in here tomorrow. And also keep in mind that the best trading sessions follow the worst. So when you got a crappy price action day, you know that means good price action's on the way. Don't get discouraged. There's always a 2 to 3 step forward, 1 step back routine with winning trade plans. Hey, everyone, have a wonderful day. I'll see you next time.